It's great to have two great friends of mine here today on Private Equity 360, Rick Nordvold and Rich Grant of Growth Operators out of Minneapolis. Rich sits in New York. Rick sits in Minneapolis. And this is going to be a great conversation because these guys are working at a company that help private equity portfolio companies with their operations. And man, has there never been more of a time now to be talking to experts like this about what's going on in the world, and it's private equity firms are helping triage their companies during the pandemic. So I want to welcome both Rich and Rick to our video podcast. And let's start with some introductions. Rick, if you could introduce yourself, and Rich, will go to you. And I want to hear a little bit about your business, about what's going on. But Rick, could you please introduce yourself?
You bet, Bob, and thanks for having us. My name is Rick Nordvold, and I'm one of the founders of Growth Operators. I spent most of my career in finance roles, culminating, pre-growth operators with a couple of roles as CFO, a couple of CFO roles for two different companies. But started a company. We've now grown to over 30 employees based out of Minneapolis. We serve companies across the country.
Rich, you and I have known each other for a long time, even before you joined this company, but could you introduce yourself?
So I'm Rich Grant. I am the director focused around business development function of Growth Operators. My role mostly consists of fostering new relationships across the market directly with the private equity firms to really work into their portfolios and figure out where, the great work that Rick and the other founders have been doing can be put to work for them in a variety of different ways.
So let's talk about Growth Operators for a second. Then we're going to go into the pandemic. But pre-pandemic, when private equity firms would bring you guys into and your team into portfolio companies, can you describe a little bit about what you would do and just a little bit about the company, and then let's move into what's going on today. So Rick, let's let you take that one.
Yeah, so over 70% of the work we do is for portfolio companies of private equity firms. So, and even now, during the pandemic, that trend continues. But typically speaking, our firm is really, we were founded on the premise that we want to be an enabler of growth. Okay, we want to empower growth within companies. Everybody in our firm came to Growth Operators from careers in companies. So, we serve a consulting, advisory, and outsourcing role for our clients, but we have walked miles in their shoes, and we know how hard that job is. So, typically speaking, private equity, being in the business of, acquiring companies and, owning them and growing them for a finite period of time, usually 5 years, give or take, and then having to sell them and increase the equity value of that company. They need growth, and they need it quickly. We like to say that's a business that's on a shot clock. They just can't dribble the ball for the rest of the game. Time is money. Yeah. So what they engage us to do, our largest practices are in the areas our largest practices in the area of finance. Typically speaking, middle market private equity firms, especially those in the lower half of the middle market, oftentimes when they acquire a business, they're acquiring it from the founder of the company. And founders are remarkable people, but by their very nature, they know so much about their business, they usually don't overinvest in a finance team. And so that has to change when that company is now institutionally owned. They've got a board of directors that has a governance duty. The private equity firm itself has a big fiduciary obligation to its limited partners. So finance has to become much more robust and get professionalized very quickly. And so we get brought in oftentimes, in that vein, really to jump in and, get that company's finance team from where it is at the time of the acquisition up to the standards that it needs to have. We also jump in situations, project basis or otherwise, when there's something going on with those companies that outstrips the experience or the bandwidth the team. These are companies that have a lot to do and not a ton of people sitting around waiting for something to do. They're all busy. And so we bring the experience and we bring the help. And I talk about it in a finance realm. We do the same thing in HR, which is our fastest growing practice. And then also through our affiliate company, we offer services in the areas of sales, marketing, and executive strategy.
So, I mean, operators, that's your name. You bring in people with operation experience into these companies. Yeah, which is going to be really going to be a good lead in. And Rich, I don't want to go past you. You want to add a little bit on growth operators to what Rick said?
Well, I would just expand on what Rick said, that, that shot clock is the number one thing that comes up in these conversations that I'm having on the private equity level. There's often times where they invested in this business because it's a great business. That owner, operator, founder just has never invested in professionalizing the finance function, human capital function. Generally, perhaps the CEO, founder is the best salesperson of that organization. But for the private equity firm to realize that growth, they know that they're going to need some help in getting the organization where they want it to be. So that's where a lot of times the conversation starts on the private equity level before we even get to the portfolio level. So.
Well, it's going to be interesting as I think about your name and what you've done in terms of, helping these portfolio companies grow by professionalizing them. Let's talk about the pandemic, because there's maybe not a lot of growth going on right now. So, except in different pockets, which we'll talk about. Can you share, because you guys are right on the firing line, you're in the companies. Can you share a couple stories right now about what you're seeing, how these companies are being triaged, help our audience kind of understand what's really happening at the company level. Rick, maybe we could start with you on that.
Yeah. And Bob, you said it correctly. It's sort of a mixed bag, because we do have some companies that, where due to the nature of their business, the pandemic actually has boosted their business. But, far more of our clients and the companies that we're seeing are really, working their way through this. But, we, very early on, having the backgrounds we have at Growth Operators, this is not the first time we've seen a crisis situation. I mean, it's the first time we've seen this particular crisis situation. We've never seen a pandemic before, but I was CFO of a company back in 2008 during the last financial crisis, and as were many of most actually of our colleagues. And so very early on, what we encouraged our clients to do is have a plan to deal with it. Dwight Eisenhower had this fantastic quote, and I won't get it exact, but I think you get the essence. But, the quote was, a plan is useless, but planning is indispensable. And really what that means, to me, it really summarized exactly, what companies had to do, because, we're in March and, all of a sudden within the span of a few days, the entire world is shut down and locked down. And, this budget and plan that the companies locked down 3 months earlier and put all this work into is now totally irrelevant. I mean, the world looks nothing like the world you put that plan together for. And so what we did, and it's sort of it kind of gets at the heart of, one of our mantras, which is, what companies do every day is always going to be hard. There's no way around that. Just don't make it complicated. Let's kind of cut to the essential things that we have to figure out and do. And this, like any other problem, we're going to get through it, right? We're going to work hard to get through it, but we're not going to run some big convoluted, complicated plan to make that happen. So we put together a very simple construct that we call LASER, and it's an acronym, and it stands for, step one, L, get liquidity. Okay, so the first thing these companies have to do, knowing that they might be shut down for months and nobody really knows how long that is, get liquidity, stabilize, fortify that balance sheet. How much liquidity, you really don't know, but put together a 13-week cash flow forecast that says, okay, if I just had to live with what I had now, knowing, this is probably what's going to happen to my business, do I have enough? And if the answer is no, then you got to go find it. Well, fortunately, there were programs like PPP and different, that made that available. And getting that liquidity was the first thing that we encouraged clients to do. And we helped them. We helped them put together the 13-week cash flow forecast. We helped them go out and apply for and get the liquidity that they needed, which then led to, the second step, which is the A in laser, which is adapt. Okay, that plan that we put together 3 months ago, totally irrelevant. So now we need to put together a plan. Well, like Eisenhower said, that plan is going to be useless, but the planning is going to be essential. So let's not over-engineer the plan. Let's put, let's sit down and build a scenario or several scenarios around what might happen because it's an uncertain environment, and adapt. And in putting together that plan, that kind of dovetails into the S and the E and the R of laser, which is, what are you planning for? Well, we said, there's probably going to be a period of time where you have to survive, which is just, you might be shut down. I mean, just plan to hunker down and use as little of that cash that you've just stockpiled on your balance sheet as you can to make sure you have enough to get through. But at the same time, realizing that you're not going to be shut down forever, so you can't play 100% defense. You got to put some offense in there. So it's plan around the S or survive. Then what about emerging? And, many people would say we're probably in that kind of quasi S, quasi E phase right now. The time when the shutdowns are opening up, and we're going to have to emerge. Well, that's another thing yet is that, we encourage our clients to say, yeah, this is difficult, but bear in mind, it's probably just as difficult for all of our competitors, right? So, if you can emerge faster, get out of the blocks faster, well, now everybody's starting from the same shutdown spot, right? So that emergent phase could be strategically to your advantage. And then the final phase is R, which is renew. And that's when we're sort of back to normal. And you've got to renew and revitalize that business. And again, I mean, if you got that early jump out of the blocks, as you were emerging, now you can pick up market share against your competitors. So, it's planning for those three kind of, distinct time horizons, with the difficulty being you don't know when one stops and the other ends. But it's back to what Eisenhower said. It's not the plan itself. It's the fact that you're involved in planning and not just letting the world knock you around. You're doing something about it, and that's what we had our clients. We were able to help our clients do.
Yeah, I imagine that planning has to be so much more dynamic than it's ever been right now. You're updating those plans almost weekly. You mentioned a couple of interesting things because we've got some of the themes in this series I've been doing here, and so glad you guys are here, is that the pandemic, represents opportunity. Every disruption represents opportunity. And I think it's going to be really interesting to look at the winners and the losers. The ones that are adaptable enough, to your point, the ones that look at their business model and go, hey, should we now pivot more to e-commerce, or do we need to be doing this? Remote workplace is crazy. This now and what's going to happen in the future. I think it's a great opportunity for some companies. And I know that a lot of our private equity relationships that you and I both have really been rolling their sleeves up and try to help them. They're sitting on the board, bringing guys like you in, because they may not have that capability. It's been an interesting time. Rich, you want to add to that?
You just said something that I have had a lot of conversations around. Basically, that living in these portfolio companies, right? Listen, when you're dealing with a private equity firm, obviously deal flow is tantamount because they usually have money that they have to get out there, and they need to find good businesses. And while that has always been when you get higher in a private equity organization, that's where the focus generally lies in the deal team. This pandemic has forced a lot of them to sort of step back, things that they had in process, they'll see through the process, maybe pause the process, but with the rest of their time, they're now diving into the minutia of this business, and they are becoming actively involved with, Rick mentioned doing a 13-week cash flow. Well, 13-week cash flows is not a new exercise in the private equity community, but it was something that usually was done once and not revisited throughout the process of that 13 weeks. What we're having conversations about people are managing that to a weekly situation in businesses that they've never had to do that before. Why? Because that uncertainty it is so ever present inside of every business across every industry. We've had, we talked about how we might tell stories. We've talked to a couple of larger private equity firms that are in the retail space and different, of different sorts. And they've seen booms where they did not expect to see booms, right?
Yep.
Whether they're outdoor furniture, some of them take out restaurants, like chain restaurants. They've been able to perform at as high as 75% of their forecasts, right? Throughout this pandemic, when everybody else is shutting down, a lot of their peers, have been forced to pause completely or live off of 50% or less of their expected forecast. The attention to detail inside of the portfolio that comes from these private equity deal makers stopping the deal flow and going into the operational sense, that's changing the game for a lot of them. What they know and what they share with Rick and myself is they can't do that forever, right? They need to get back to eventual deal flow. And that's where a firm like ours comes into play, because of that operational expertise that can be turned on and off based on the bandwidth that you have as a team.
Rich, you bring up something interesting. I was talking to a CFO of a very large private equity firm that I obviously won't name their name, but they divided up in two teams. One, their defense team and their offense team. Yeah. So the defense is like where you guys are playing, like what are we going to do? The triage, unfortunately, Rick, you mentioned PPP. Unfortunately, most of these private equity portfolio companies are not eligible under the PPP regulations. So there's a lot of furloughing going on. But the offensive side, I thought that was an interesting strategy. Okay, this team is going after opportunity. We're not done yet. And they're looking to buy some firms out of bankruptcy right now and doing some really interesting things. So, I kind of think back to 2008 when Warren Buffett was buying. It's interesting how firms are like, they can't stop being aggressive. They got to get that capital out, right? I mean, so it's been interesting. Well, as we start to kind of go around third base toward home, I want to talk a little bit about industries and get your read on that. Mm-hmm. As I mentioned, we've had some really interesting reads on that, where obviously retail, real estate, we've seen some portfolio companies get hurt in elective healthcare. Like, no, we don't need to do that right now. What are you seeing? Do you have any perspective that our listeners or viewers could benefit from an industry standpoint? Some winners and losers you'd like to talk about without obviously naming names?
Yeah, I mean, I think, what we're seeing, we worked in 17 different industries over the past 12 months. So we're really industry agnostic. We see a lot of different industries, but, we see some of the industries, we had a private equity firm that closed on the acquisition of a chain of car wash and auto detailing, location shortly before the pandemic happened. And that obviously is a situation where, that business, that's a very pandemic sensitive business when people aren't out and about. And, if you're not driving your car, you're probably not going to, retail, restaurant, we've got, companies and, clients of ours in those spaces, physician practice management practices where, obviously with non-essential healthcare services, that's a very common space where private equity firms are acquiring and rolling industries up. So in those cases there, while business was slow, a lot of the private equity firms, honestly, were looking at it as, as an additional opportunity to look, at their overall roll-up strategy. If you're rolling up independently owned, whatever it is, chances are when, somebody sees what can happen in a pandemic, in many cases, they just realize that, they just want to practice their craft and they'd really, rather just, not worry about the business end of things. And, I don't know too many dentists and podiatrists and, ear, nose, and throat specialists that want to be applying for PPP loans. That's just, they'd rather practice medicine, and so rolling those industries up, with practice management organization have a great pitch. And so, it can be a great, advantageous time too, where there's a bigger pool of folks that, could be add-on acquisition opportunities for those roll-ups. So, we saw, private equity firms that got hit hard, but saw, silver linings in it. We also saw companies owned by private equity firms where the pandemic, was actually helpful and, and beneficial. And, and those, anybody, any industries really revolve around anything in the home. People being confined to their homes, and that, it's crazy. I don't think most people realize how much money you spend on, going out and entertainment, the movies and ball games, and until you can't do it, and then the savings rate goes up, and you're stuck kind of living within your four walls and yard, if you have one, and you make investments in it. And so we've got a client of ours in the patio furniture business that is just absolutely their business.
It's got to be exploding. Yeah.
Clients that make home furnishings and different things. I mean, again, they're actually their problem is different. They had to go to 10-hour shifts 6 days a week in their factory. It's an American-made product, and they have trouble literally finding people to work in the factories because actually it's a situation where unemployment is pretty lucrative, and they actually have the same constraints that many companies did pre-pandemic. It's hard for us to recruit enough people to work on the floor. So we've but I think those industries we've seen a variety of different industries all affected in different ways by this thing.
Rich, do you have any perspective on that as well?
Well, Rick covered a lot of what I've been hearing frequently in the conversations I have. Again, most of my conversations coming directly with the private equity firms themselves. They've just seen some of their businesses that they were really nervous and worried about perform way better than expected.
Mm-hmm.
And they're forced to the sort of tough situation of, as they're looking at their forecasts and their budget and they're paying attention to this stuff, how much of it is going to reel and maintain, how much of it is going to be a blip that we're going to have to talk to the LPs about, hey, this is a situation that COVID created, and this is our plan going forward. So, those industries are the retail, the food service industries, for some larger chain like restaurants. Those are conversations that they're forced to have that are good conversations, because the other conversation was, how do we report to our LPs about these tremendous losses, and what are we going to do about it, right?
Yeah.
A lot of the talk has been fortunate that they could abate those conversations, really with just attention to detail.
That's interesting, because I'm going to try to follow up with an interview on the institutional limited partner side of the equation, because as you gentlemen know, we have a fund administration business, so we kind of go all the way up the capital stack and understand what the private equity firms are dealing with their investors that you're talking about, Rich.
Yep.
It's interesting. I mean, my just anecdotal read right now is that you got a lot of patient investors up there. They're playing the long game. Pension funds, teachers' retirement funds. They're not falling out of love with private equity. Far from it. So I think the capital, there's still a tremendous amount of capital stuck there, but not stuck. That has to be deployed. I don't think private equity is going anywhere.
Nope.
And I think that's where the innovation is going to be. And I think investors really see that. So this will be an interesting thing. Maybe we could revisit with you guys later in the fall for an update about where you see the industry is, how they handled it during the summer, early fall. But I think there's going to be some real winners out of this. I mean, certainly nobody wants this, but a lot of if anybody's going to innovate, it's going to be the private equity industry. They find value. They bring experts like you in.
Yep.
So it's going to be an interesting ride.
Well, Bob, I had a conversation earlier this week that I found out that a large private equity firm that is very well known, focused specifically on the middle market, has gotten 10 deals done since March and has another 10 plus under LOI, right?
Nice.
The creativity that lives in this private equity market and the ability to work with management teams to sort of craft a way forward is unique, right? Like deals are getting done in this space that we're playing in. And that's why, you know, we stay glued, you know, on that private equity, you know, deal team level to figure out where we can help out as operators, because, you know, they're also going to be starting these investments in a very unique time period, right? Like, it's going to be an interesting first 100-day plan, right? Like, it's going to be interesting.
Yeah. Well, if you go back to pre-pandemic and you realize, remember we were talking, I mean, with all of our private equity clients and yours, their concern back then was deal flow and high valuation.
Right.
So if you think about, well, we've got that fixed right now. So it'll be interesting. Well, gentlemen, I want to thank you very much. This has been great. You know, we'll make sure we post your contact information as people exit this video. They'll be able to see that. But any other closing comments that Rick and you and Rich would like to make and before we wrap up? Rick, we'll start with you.
Yeah, I mean, I just, you know, I think you guys, you know, you were heading in that direction, and you know, along the last, you know, kind of, you know, conversation topic. But you know, private equity, you know, there's still $1.5 trillion, you know, of overhang sitting there, and that's not going anywhere soon. And you know, the good private equity firms are, you know, all looking at it, saying, you know, to your point, Bob. I mean, finally, you know, we don't have to, you know, we think valuations are going to, you know, come back to, you know, what, you know, kind of the new normal is going to be the old normal. You know, I mean, you know, before valuations got so high and deal flow got, you know, incredibly difficult. So, you know, that creates opportunity. They're looking at, you know, finding the opportunity in what's going on here. And, you know, and further, you know, I think, you know, we're hearing, you know, some of these private equity firms say, look, I mean, this is, you know, for those of you that are golfers, they're calling it sort of, this is our mulligan year, you know, and I mean, you know, the results are, you know, financial results of 2020, you know, if 2020 is, you know, a tough year, I mean, nobody's going to blame any company for that. Right. And so they're taking advantage of it to say, look, I mean, if we were reluctant to make investments or, you know, spend on some things that are going to pay off, you know, down the road, for fear of, you know, putting a blemish on our, you know, P&L, you know, this year, because, you know, we were trying to preserve a certain level of, you know, of performance, you know, the heck with it. We're going to make it, you know, if that investment helps us in 2021, 2022 and beyond, let's get it in there this year. If we have the cash for it, the capitalization for it, let's make those investments. And, you know, because the one thing we all know, this thing's going to end. And, you know, when it does, you know, those that have made those investments, you know, I mean, private equity is still in the business of growing businesses. And that's, you know, what, you know, we're in the business of helping them do that, you know, and those that are taking advantage of this, you know, I think those are going to be the firms that, you know, are going to be the real winners, you know, in spite of very difficult situations. So, you know, it's encouraging to see that.
Yeah. Well put. Well put. Richard, any final comments?
Just that, you know, like Rick's sentiment said, you know, I look at what I see across the middle market and the lower middle market, just as an outstanding opportunity for people to sort of reassess their investment thesis and adjust it accordingly, right? There's not a better suited, you know, asset class to do it than this middle market private equity focused class. And, you know, I know that, you know, Bob, you and I have frequent conversations about this. There are all kinds of different times that firms like ours can get involved in the process and make a difference. And I think that this time has reminded me of that, right? With our title being growth operators, a lot of times people think about us at the onset of a new acquisition. But what we found during this time, the fungibility of our skill set, the adaptability of our operators just plays very well with this change in environment. And we're just pumped to help in any way we can, whether it's 3 months or 6 months or a year project, it doesn't matter. You know, we're here to really help the market because these founders and owner operators have great businesses.
Well, I agree, Rich. I want to thank both you and Rick. I mean, if you really step back and think about it, to have a company like yours that has that kind of operational experience that could come in on a project or an interim basis during the probably the craziest time that we've ever faced as business people. I'm sure your business is going to continue to do well, and I hope that some of our friends reach out to you. So thank you, gentlemen, and have a great rest of the week.
Thanks, Bob.
For you as well, Bob. Thanks to you and the team at Fraser & Dieter.
Thanks for listening to one of Fraser & Dieter's branded podcasts. To learn more, connect with us on LinkedIn or visit us at fraserdieter.com and be sure to subscribe so you never miss an episode.